Sven, as an investor, do you have a look at sort of the Chinese impact?
Well, I would say there are different levels of looking at. For example, if you're talking to our LPs, basically, even coming from the US, they basically say, well, of course, for us, the US is interesting, but on the other hand, geopolitical and political tensions amongst China and, for example, Taiwan, of course, and even our country are increasing. India is complex, Africa is difficult, and South America hasn't delivered, so Europe remains very attractive.
Todd, is that something, what do you see in terms of the data?
What we've seen in the data is that you kind of like the needle on the record, if you will, it all kind of stopped in June of last year. And we were in the doldrums of the water and you couldn't really get a sense of direction. However, what we've seen to begin this year is a lot more activity on our platform. And the activity metrics we look at is the number of new projects or new transactions that are launching. We look at the amount of content being accessed in those transactions, and then just utilization statistics. How many people are logging in every day to do something? And typically it's the more junior members of the deal team or the legal team that are actually in there interrogating. And as of last quarter, we were seeing all-time records for engagement on all three of those metrics, so that's bullish.
Michael, as regards to from Aon's perspective, obviously you also see a lot of developments in terms of sectors, in terms of gravitude and so on. What's your view on recent developments?
Going back to the financing point, what we're starting to see is people looking through the windscreen, seeing that uncertainty, and while some of the drivers like inflation seem to be flattening out, people understand that higher for longer is likely to be true. And so a number of clients and deal makers are coming to us saying, in the relatively unexplored areas of our balance sheets, what assets do we have that can help unlock or support financing? So to what extent can we look at our intellectual property or our intangibles and unlock potential financing through that in a way that makes the banks or the private credit lenders more comfortable? To what extent can we look at our working capital optimization and use some of the collateralization capabilities of the insurance market to help increase the liquidity that we're facing? So I think, look, the rearview mirror definitely looks worse than the windscreen, but the uncertainty can go one or two ways, and there's no doubt there's a huge amount of challenges there. If I look particularly at the German region, there are still huge amounts of assets in terms of brands, technology, etc., that give us significant cause for optimism.
The higher interest rates, how do they impact sort of the strategy on existing portfolios? Has the number of private equity activity on the sell side decreased because simply the investment thesis don't match with current interest rate environment maybe?
My impression is that clearly, private equity on the sell side is not a typical phenomenon we currently see. For obvious reasons. Clearly, the probably returns would be somewhat not that great as they had before. So therefore, currently I don't see too many private equities selling good assets. Having said that, clearly there is always, ideas around, let's say, value creation, what you were mentioning, and I think that will become even more important going forward, and with various aspects. And you said that talking more or less to every stakeholder, all the stakeholders around the assets, it's about decarbonization and so forth. Historically, clearly a lot of the returns of private equities also was due to the fact that we had multiple arbitration in a way. Markets went up and money was cheap, etc. Now we have a certain period of higher interest rates, and now it becomes even more important to let's say work with the assets and the investments and create value per se.
And the good news is that investing in private equity is much older than zero interest rate policies of central banks. Yeah? That's right. And however, times are a bit more challenging. And if we look at our recent buy and build strategy, for example, of course, there's a market which is growing. It's basically a market which is not yet consolidated. So we can tick a lot of boxes. And if we and there are a lot of advantages in making the company much bigger, because then you can organize how to work differently, you can educate your own people, recruiting is different, so you can solve a lot of critical aspects. And what you can also solve is that a lot of these, let's say, smaller companies cannot be sold at the moment, or at least not be sold at a price which is in the head of the current shareholders. So you can offer them, in a way, a structure. You can offer them a structure where they can basically sell a part of their companies, reinvest it in a larger structure, and then also take their fair share of the larger company.
You don't want to miss it.
pemacom 2024. Register now.